Most people chasing European residency are still scanning outdated blogs and taking advice from friends who haven't done their research. They spend months overthinking it, miss the window, and end up stuck. Here is the truth. Portugal's Golden Visa is still very much alive, and the investment fund route is the most straightforward path into it right now. €500,000, professionally managed, tax-free dividends, no landlord headaches, no property management, no ongoing tax burden, and the direct road to European Union residency for you and your entire family. By the end of this video, you will know exactly how this works, what to look for in a fund, and what questions to ask before you commit a single euro. Before getting into the specifics of how this works, it helps to understand what an investment fund actually is. An investment fund is a pooled investment vehicle that allows multiple investors to put money into a professionally managed portfolio of assets like stocks, bonds, real estate, or a combination of these. The fund is managed by professional fund managers or asset management companies who make investment decisions on behalf of all investors. For Golden Visa purposes, eligible funds fall into two main categories: funds specializing in private equity or venture capital, and mutual funds designed specifically to meet Golden Visa requirements. The way these funds work is straightforward. Investors contribute capital that is pooled together and managed by a fund manager. That manager is responsible for making strategic investment decisions across a portfolio that typically includes stocks, bonds, real estate, and other securities. The fund is divided into shares or units, and each investor's ownership stake is proportional to the number of shares they hold. The total value of assets in the fund minus liabilities is known as the net asset value, which represents the per-share price. Through this structure, even investors who could not independently access certain asset classes benefit from professional management and genuine diversification. For a fund to qualify for the Portuguese Golden Visa, 4 conditions must be met. The fund must be approved and regulated by the Portuguese Securities Market Commission. At least 60% of the fund's capital must be invested in companies based in Portugal. The investor must purchase fund units for a minimum of €500,000. And that investment must be maintained throughout the entire Golden Visa process until permanent residency or citizenship is obtained, which typically takes at least 5 to 7 years. Within that framework, there are several types of qualifying funds. Venture capital funds focus on providing capital to startups and small and medium-sized enterprises, and they must allocate a minimum percentage of their investments to Portuguese companies for the required period. Private equity funds invest in private companies, often acquiring significant ownership stakes, and are similarly bound to direct a portion of capital toward Portuguese businesses. Beyond these, there are funds supporting arts, culture, and historical preservation, as well as scientific research funds that channel capital into research and development, technology startups, and innovation projects. Each type carries its own risk, return, and lockup period profile, and a licensed advisor can recommend the most appropriate option based on an investor's specific objectives. All qualifying funds must have a minimum maturity of 5 years and allocate at least 60% of investments to Portuguese-based commercial companies, excluding real estate assets. They are overseen by regulated investment fund management firms, and all funds are closely monitored by Portuguese authorities, ensuring transparency, risk management, and periodic thorough audits. Some even receive support from the Portuguese government or the IFD, the Instituição Financeira de Desenvolvimento. For non-resident investors, the tax treatment is particularly attractive. Dividends from these funds are entirely exempt from income tax, including withholding tax. Capital gains resulting from the redemption of participation units or fund liquidation are also tax-exempt in Portugal. There is, however, an important cost to be aware of. An initial subscription fee of up to 5% may apply when signing up through the managing company. When it comes to the advantages of this route over alternatives like direct real estate, the case is compelling across several dimensions. Funds provide genuine diversification. You are not tying up capital in a single property but gaining exposure to a broad array of assets. You benefit from the expertise of professional fund managers making strategic decisions based on research and analysis. The investment is passive. It requires far less time and effort than directly managing real estate. Many funds target overall annual returns of between 7 and 10%, compared to typical rental yields from real estate of 3 to 4%. The fund route is also more cost-effective than the capital transfer option, which requires an initial capital of €1.5 million. And unlike real estate, there are no substantial ongoing fees or tax responsibilities once the investment is in place. Exiting is also simpler. The fund manager handles asset divestment at the fund's end, whereas selling real estate involves agent fees, legal fees, and capital gains tax exposure. That said, there are real drawbacks that investors must weigh honestly. Unlike real estate, you do not directly own a tangible asset. Lock-up periods mean your capital is tied in for 5 to 10 years depending on the fund. There is limited control. You must rely entirely on the fund manager's expertise and judgment. And you will share a portion of returns with fund managers through management and performance fees. There are currently over 50 funds open to Golden Visa investors, with more seeking approval. And not all of them will necessarily raise the capital they need, which could affect profitability due to management fee drag. Due diligence is essential. When evaluating a specific fund, investors should think carefully across 3 core dimensions: performance, risk, and costs. Ask yourself what your preferred strategy is: preserving capital or maximizing returns. Consider which sector interests you: real estate, healthcare, technology. Think about whether an ESG-oriented fund matters to you. Be clear on how long you can realistically commit your capital and whether you want to concentrate in one fund or spread across several, since some funds require the full €500,000 while others allow smaller allocations across multiple options. When meeting with fund representatives directly, the questions that matter most are: what are the credentials and track records of the managers and advisors? What is the investment strategy and risk profile? How diversified is the portfolio and how many holdings does it contain? What level of leverage does the fund use? What is the target fund size and how much has been raised so far? And what is the contingency if they fall short? How much have the managers personally invested their skin in the game? What is the expected annual target return? Does the fund distribute dividends and how often? What are the fees in full, subscription, management, and performance? And is the subscription fee separate from or included in the investment amount? For American investors, do they provide annual PFIC information statements? And critically, what is the exit strategy, and can you exit before the fund's term ends if you obtain citizenship or permanent residency earlier? Investment funds present a genuinely attractive pathway to the Portuguese Golden Visa, offering diversification, professional management, tax efficiency, and a lower setup cost than most alternatives. But they are not without risk, and the quality of the fund matters enormously. With careful planning, thorough due diligence, and well-informed guidance, this route can be a very effective way to secure Portuguese residency and everything that comes with it, including full access to the European Union.